So the Japanese yen has weakened at the same time where interest rates are high. So let's dive into that. So it all starts with the statement from the BOJ that acted exactly the same way as the Fed. So they're not changing rates, but they do in a pretty interesting way where they just put two pages on a PDF and say the bank will encourage the uncollateralized overnight call rate to remain at around 0.5%. And that is very important because now the whole market is actually waiting for the BOJ to understand what they actually think, because we have on one end a whole perspective of Japan normalizing or welcoming inflation because there is a recovery path, but we all know that it's not really what's happening. So we have a whole destruction of narratives that need to happen and the realization from the BOJ before participants buy bonds, especially on the long end. So we have the 30-year yield, and it's still going up. It's still at all-time highs. But the dollar at the same time, it's also creeping higher. So we are almost at 100. So we were at 100 at one point. So the dollar is coming back, and all of a sudden those narratives of the dollar is dead or nobody wants U.S. debt anymore. So it kind of goes down. So now the problem is the yen. So the yen is also weakening at the same time, and we see here on this chart. So we are just over 150. In a recent past, this would mean that the BOJ needs to start intervening at some point and not admitting it afterwards. That's as typical from the BOJ. But let's see what happens, because right now they want to make sure that it has a resemblance of a free market somehow. We actually discussed that on our BI report as well. How the yields in Japan are creating a lot of trouble, basically because of fiscal. So it's all because of fiscal sustainability. So Japan is a little bit different than the U.S. and or Europe, where they own over 50% of their bonds, and there is a lot of policy uncertainty and risk premiums. This is exactly what is happening to the 30-year yield, because nobody wants to buy them if you still think that the BOJ is going to keep raising rates. So they prefer to wait and be out of the market, and then you have not really a huge volume of buyers left. And why does it matter for liquidity, or especially for Bitcoin, right? How can that move markets? Because this defines a little bit of the mood for a carry trade. Is the carry trade actually back, where you take those cheap yen and then you go and invest in the United States? So this chart suggests the conditions are actually a little better now for that. So maybe we could see some swing back of capital back to the United States. So we still have to wait and see, because the dollar is not that strong as of yet. So this is why I would watch the DXY, I would watch the yen, the JPY. So this is going to be interesting from now on. But it's a tricky situation, because you try to defend both the bonds and also the yen, and you cannot do them at the same time. Because if you just want to normalize the market, quote unquote, as the Bank of Japan says, then you have to let those interest rates soar. But Japan has over 250% debt to GDP, which is the highest on the developed world. At the same time, if you want to defend the bonds, you have to print money to buy them, which crushes the yen. But the yen is already going down, so that's tricky. You have the worst of both worlds at the same time. So let's wait and see. This does not mean that we have any kind of anything breaking, but it's an uncomfortable situation. So I would not be surprised if all of a sudden we have a sharp turn down And then days later, we see the BOJ announcing any kind of open market operation. So let's see how that goes. And of course, we also have a whole shift of a multipolar, fiscally expansionary world. So Japan is a big part of world liquidity. Japan is a big distributor of dollars, and that defines what happens to risk on assets. And this is a part of what defines Bitcoin prices, which are still at the. Let me actually pull quickly those prices here. So. And again, it's incredible how Bitcoin is actually resilient to become. It's really becoming a global asset at this point, because it doesn't really matter if it's correlated to the actual carry trade, because this is one of the new carry trades, so to speak. So this is like a global risk on asset, but at the same time being a reserve, because it went through wars. It went through a whole dollar down, taking advantage of that. And so let's see how actually Bitcoin reacts if we have a hard swing at the DXY. Let's say it goes to 105, 110. That could be interesting to see. But so far, extremely resilient in what comes to the Bitcoin price because of liquidity. It's all about global liquidity. So we have the US producing liquidity, we have China producing even more liquidity, and Japan will probably need to keep stimulating the economy, because even though Japan has a whole narrative of normalization, it's I mean, it does not sustain. The market is really calling their bluff here. So if they change their mind, maybe they admit they were wrong, and if they keep going, they produce a whole problem with bonds. It's really not a comfortable position to be. So this is one of the motives. Actually, Bitcoin is a great asset for these times as well. If you live in Japan, let me know. It's great to interact with you guys as well. We have a great Japanese audience. So let's see what happens. But it's a tricky situation. But for sure, anything they have a lot of tools, but many of those tools require liquidity injection, and this is of course good for Bitcoin. So let's see what's next. See you in our next video.